The crypto markets are gearing up for a potentially game-changing week. The Federal Reserve's next rate decision, Ethereum's massive Fusaka upgrade, and XRP's ETF deadline are all colliding in what could define the rest of 2025 for digital assets. Welcome back to the Crypto Loop, where we cut through the noise and break down what's actually moving the markets. Let's jump straight into it. First up, the Federal Reserve's interest rate decision. Markets are now pricing in a 98% chance of a 25 basis point rate cut on October 29, 2025. A lower interest rate typically means a weaker U.S. dollar, and when the dollar dips, Bitcoin often shines as a hedge against it. Recent inflation numbers came in exactly as expected, which gives the Fed more room to ease policy. But remember, if the Fed surprises markets and doesn't cut rates, brace for some short-term volatility. Traders are watching this one closely. Next, Ethereum's Fusaka Mainnet fork, set for December 3, 2025, and this one's huge. The update introduces a new feature called Peer-to, which lets nodes verify data through sampling rather than downloading everything in full. In simple terms, layer-2 transactions could get up to 90% cheaper, making rollouts faster and more efficient. That could drive a surge in ETH demand and renewed activity across altcoins. But validators, take note, you need to upgrade your clients to avoid potential network splits once this fork goes live. Over to XRP, which is entering a potentially historic phase. Between October 18th and November 14th, the SEC will decide on 6 XRP spot ETF applications. If approved, it would mark the first ever non-Bitcoin, non-Ethereum ETF in the United States, a major milestone that could fully legitimize XRP after its long legal battle. According to prediction markets, there is a 77% chance of approval, and a green light here could ignite momentum across the entire altcoin sector. A denial might trigger some short-term pressure, but overall sentiment leans bullish. Now, shifting gears to Europe, Spain is taking the lead on regulation. They'll be enforcing the EU's MiCA framework by December 30, 2025, a full 6 months ahead of schedule. That means all crypto service providers in Spain will need to register and obtain licenses, bringing stricter AML and KYC requirements. Sure, that might slow down retail trading for a bit, but long-term, it builds institutional confidence and makes Spain one of the most forward-thinking crypto hubs in Europe. And finally, let's talk about U.S. politics in the upcoming Crypto Week 2026. Republicans in the House are planning to advance 3 major crypto bills. 1. The Genius Act, which supports state-led stablecoin oversight. 2. The Clarity Act, defining clear boundaries between the SEC and CFTC. 3. And the Anti-CBDC Surveillance State Act, pushing back against centralized digital currencies. If these pass, the U.S. could finally establish itself as a global leader in crypto innovation, though the Senate still needs to reconcile its version with Trump's public support. These proposals are gaining serious political traction. So, what's the big picture in the short term? The Fed's October 29th rate cut decision is the main catalyst to watch. If Bitcoin can hold above that $115,000 resistance and ETF inflows keep climbing, we could be looking at the start of a strong cue for rally in the long term. Regulatory clarity from both Spain and the U.S. could stabilize the environment for institutional investors and lay the groundwork for a more sustainable bull market. The next few weeks could reshape crypto's trajectory, and we'll be tracking every twist right here on the Crypto Loop. If you found this breakdown helpful, smash that like button, subscribe, and ring the bell so you never miss a market update. Stay sharp, stay informed, and as always, stay in the loop.